Thank you very much, Brian. Brian, I gave everybody a little bit of an overview of the commodities that you have exposure to at the Antilles, and you really are in the driver's seat. Gold, silver, and of course, the latest one, which is antimony. And Cuba is really an emerging place to be, to have this type of exposure. It's very rare to have all these commodities and have all this upside with your market cap. But for investors that aren't that familiar with Antilles, can you just give an overview of the business, please?
Yeah, certainly. I'll just focus initially on the two and potentially three near-term projects that we've got within the 50% owned joint venture company in Cuba. First project is a small copper mine, actually, called Nueva Sabana. Has the benefit of a fairly rich gold cap. There's about 70,000 ounces of gold in 700,000 tonne of ore, which we mined over the first 15 months. And then it becomes a copper mine going from there with fairly minimal gold credits. It's interesting that this particular mine, we've only drilled it to 100 metres of depth. So we're just looking at the first stage in 4 years, but our geologists and others are very confident this mine will go for another 4 at least years in a copper, and it will transition into the El Pilar copper porphyry deposit that is underlying it and slightly offset to the south. So that's a little mine that is going to cost about $30 million to develop, just over.
Right.
We're hoping to start construction before the end of this year. We've just had a revised mineral resource estimate that has pushed most of the inferred resources up into indicated, also increased the gold in that top cap, which is helpful kick off with a fairly rich gold concentrate at current prices. And long term, who knows, it might finish up in El Pilar porphyry because we've drilled 10 holes into it and it's looking pretty promising, but we don't have the cash to carry on with that exploration at the moment. That little mine will generate for the joint venture between 25 and 30 million US per year from about the end of next year when the concentrate starts getting sold. The probably outstanding major item at the moment is to complete the negotiations for the concentrate offtake, and
Right.
with that goes the financing for the mine construction. All the pre-development costs have been paid for by the joint venture, and some of the preliminary construction is underway right now, like access roads and things like that.
Right.
We're well advanced in negotiations with a particular group and quite confident that will transpire into a term sheet towards the end of October.
So that's a very and would you be hopeful to have something signed by the end of the calendar year, perhaps?
Absolutely.
Okay.
It won't take long to document this because we've been dealing with a particular group for nearly 2 years.
Okay.
And they've done all their due diligence, just waiting on the revised MRE, which we can send to them now. We received that a couple of days ago, and they're waiting on the revised mine plan, just so that we can schedule, and they have certainty that the mine will at least go for 4 years.
Right.
Their own geologists are confident it will go for longer, as are ours, but that's in the future, obviously.
And even at
So,
4 years, it still makes a lot of economic sense.
yeah, exactly. For us, for the joint venture in particular, it's first cash flow. Yeah, it's so important, even though it's a small mine, to generate 25 or 30 million a year, potentially for 8 years while we settle down. Also, developing a small mine first up in Cuba is probably a positive from a management perspective, to be frank, rather than
Right.
doing something too complex up front. Very simple. Concentrator, produce a gold concentrate for about 15 months, 16 months, and then a copper concentrate.
Right.
Very straightforward mine. Near surface, the gold deposit is outcropping. And it's well located, central Cuba. It's 1.5 kilometres from the main highway, rail link close by to the port, high tension power line that the government are allowing us into, which is a little bit unique, rather than having to build our own power station. So, and also we're able to hire the mining fleet from a subsidiary of Volvo in Cuba. It saves us buying a fleet and even maintaining it. So that's a saving on that capital cost as well.
Right. And also, just Brian, and for investors out there, what we're noticing across the board are the companies that are staging their projects, that are staging their businesses. Those are the ones where the share prices are getting rewarded right now. It's not the ones that just have a massive NPV, but really very little way of monetizing it, so to speak.
We have a very concrete business plan going forward. It's been agreed with our government-owned partner. It's a great jurisdiction, Cuba, to operate. Might surprise a few people, but having a government mining company as our partner it gives us a lot of comfort in things like permitting. We find environmental permitting goes through very smoothly without, deliberate obstructions. There are no strikes in Cuba, no
Right.
industrial problems, and the government are very supportive of little Antilles gold, I can tell you. The second plan, it's not certain yet, I have to emphasize that, but I'm negotiating to try and bring into the joint venture a quartz vein gold structure. There's 10 identified structures that Geominera, our partner, have drilled 3 of them. They've got 270,000 ounces of indicated resource, 4.5 gram material outcropping. And
Four
I'm
and a half
trying to,
grams,
yeah, four,
very
four and
high
a half
grade.
grams per tonne is the grade within that 270,000 ounces. Our geos are confident it will be a 1 million ounce deposit with these 10 separate structures, 3 of which, as I said, have been drilled to date. Now, we don't have this project, but I'm fairly keen to bring it along as quickly as I can, and we'll see what comes out of my next visit to Cuba in October, November.
Right.
But the certain project that's in front of us is much larger from our perspective anyway, and more complex metallurgically. It's the La Demahagua project.
Yes.
It's a 9-year life open pit mine with a potential of doubling that mine life by going underground. It's got 1 million ounces of gold equivalent in the mineral resource estimate, most of which is indicated. We did a scoping study for that mine, finished in March 2023, based on selling a gold arsenopyrite concentrate. But the market has changed over the next 18 months because the Chinese brought in taxes on high arsenic material, and Trafigura, who had indicated an offtake agreement to us at the time, and who I might add have invested 300 million in a base metals mine in Cuba, very comfortable about the jurisdiction. Anyway,
Right.
Trafigura offered us to offtake the total tonnage we produce in 2023, but within a year they changed their attitude because of the Chinese tax, made it difficult for them to sell economically into China, and also the surplus capacity within smelters outside of China. That surplus capacity was diminishing. So when Trafigura could not offtake all of our tonnage, we decided we'd have to oxidise the material in the country and produce a doré. So that La Demahagua project has just been through 9 months of met testing, which we
Right.
released the results the other day, and two very positives come out of that.
For
Good gold
sure.
recoveries and 92% gold recovery out of through the CIL plant, and more to the point, additional antimony recovery, and you referred to that indirectly.
Yes.
We've got the potential of a total of 4,800 tonne of antimony being produced per year, which is equivalent to what is produced totally in Australia at the moment. So it's not an insignificant amount.
Right.
Got antimony prices now 26,000 tonne per ounce, per tonne, I mean. We get paid by the smelters about 47% of that contained antimony within the 26,000 is for purified 99% ingot
Okay.
antimony. So it's in its final form. So in a concentrate, you get paid about 47 to 50%. And it's in shrinking supply. So we're feeling really good about this project, and the fact that we've delayed it for 18 months or so while we play around with this metallurgical work to oxidise has been great rewards in the increased gold price, obviously, and
Right.
also the antimony. Now, that project, the scoping study we did last year, demonstrated a surplus cash over that 9 years after capital cost repayment and so forth of about 350 million US. That looks like increasing to something like 750 million. So the surplus cash, even though we will have additional capital cost, that surplus cash is probably going to go up by 400 million.
And Brian,
No,
is that due to the antimony findings or to just the gold price movements?
both.
Okay.
The reality is in when our scoping study was done on the basis of selling a concentrate, the best price you would get is 75% of gold, contained gold value. There's also shipping prices. You have to ship that concentrate. And the price of gold at the time was 1,800. So we were getting 1,350 an ounce for gold. We're now going to get 92% or whatever it is of whatever,
crazy.
2,500. But allowing 2,200 for a gold price, it adds about 50 million a year to the income. And the antimony increased quantity and increased price adds another $100 million a year, 50 million a year. So
Right.
you've got now a project that has got scale and profitability that I think will attract a third party. The joint venture's aim is to try and attract a Chinese company with experience with these two-stage fluidized bed roasters. We don't have it. They don't have it. And I think we'd be reinventing the wheel trying to bring in people from scratch. So if we sell off 30 to 50% of the project, it'll help in the project financing, obviously.
Sure.
We'll get diluted. But our total investment in that project's only $10 million. So, we'll finish up with, even at 30%, we'd finish up with about 25 million a year US cash share.
Right. And Brian, yeah, and let me also add, I know a lot of times the market doesn't pay attention to met test work per se, but when you talk to real JV partners, they do care, don't they?
Oh, of course. Absolutely.
Yeah.
Yeah. And we're very confident with all the met. We've spent a lot of money, or the joint venture has spent with our cash of injection, but we pay a lot of attention to the metallurgy. We have a technical director, Chinese Canadian, based in Vancouver, Dr. G, who has worked with Eldorado on refractory. He was their technical director on the refractory gold deposits in Eastern Europe, Turkey, and so on. Very talented guy. And he, luckily with the Chinese, he's able to have much better liaison with the engineering groups and suppliers that we're hooked into for both our projects, in fact.
Got it. Hey, Brian, from a high level for investors, what should, over the next, call it 12 to 18 months, what are the big objectives for Antilles?
Well, the primary objective, as I said, is getting the first little project funded and underway. Yeah. That's a real key. For me, the second objective is to try to pull off this third project, which would become the second in actual fact, because it's a more modest capital, probably in the 40 to 50 million range. It's a small CIL plant, but could produce 70,000 ounces of gold per year. So that's an objective. It's not a certain that we will pull that off, but I'm confident. The third one is obviously get the La Demahagua project development ready. That still needs a lot of work and probably some more drilling and to just firm up antimony grades and various things. But between now and the end of next year, they're the three primary things that we're working on.
Right. Brian, it's very rare that a company with your market cap has, three, clearly defined objectives. Even the first one, just generating 25, 30 million bucks of cash flow, certainly, easily pays for itself. Brian, thank you so much. Apologies for all the technical issues.
No, not a problem, Craig.
I just want to open up. Does anyone have any questions at this point? Don't be shy, or you can WhatsApp me if you want to. Brian, I'm getting one, and somebody's WhatsApping me. Can you just talk about doing business? Let me just read it. Doing business in Cuba. I think what he's saying is, from a regulatory point of view, how do you handle it? I think it's probably by your JV, if I was guessing.
Well, as I said earlier, Cuba's a tremendous jurisdiction in which to operate. They've got good mining law, good environmental law, good foreign investment law that protects foreign investors. They are very positive about attracting investors in the mining sector, the tourism sector, the agricultural sector, and more there is investment coming into the country from everywhere except the US, where there's the sanctions. But
Got
yeah,
it.
from China, from the Middle East, and so on. Europe, Cuba doesn't hold any problems for those parties. The biggest difficulty is funding,
Right.
because so much of the funding has US control in some shape or form. But we'll get there step by
Gotcha.
step. But I think dilution is probably the ultimate answer to the Chinese or to a Middle East group or somebody on that bigger project.
Right. Hey, Brian, someone else is asking me, since you put out your antimony met test work about 2 weeks ago, have you had any third parties reach out to you?
Well, we're well advanced actually in a sales contract with a group in China. We've
Right.
had a consultant test the market, various groups, including the antimony smelter in Oman, who at one stage indicated that they might assist in financing. We've actually selected a group that we want to run with. They've only come back and said, "Oh, good. Looks like you have more for us." That sort of
Right.
thing. So, I haven't been flooded with inquiry because we've actually been in contact with most of the potential buyers.
I see. Got it.
We've sort of followed Costerfield from Victoria, where they go. That's where we started. So, and we expect to produce more antimony than they do. So
Got it.
let's wait and see.
Okay. Someone's asking, this is quite a technical question about smelters. Are there smelters in Cuba, or would you ship product overseas first?
No, we'll produce the gold doré through this roaster stroke CIL plant, and
Okay.
that doré will go to Switzerland or somewhere else for refining, maybe Canada.
Right. Okay. Another one, I apologize, I have no idea. Tariffs in Cuba. I'm not sure what this person is exactly asking me, but
Are
I
there
think
terrorists in Cuba?
tariffs. No, tariffs.
Tariffs.
TARR.
So
It's my accent. Sorry.
I thought you meant terrorists, because
No.
that's what Mr. Trump declared. There were terrorists there 5 days before he stepped down from his last presidency, and
Okay.
increased the embargo on poor old Cuba. Tariffs, no. There is normal import duties, as you would expect, but
Yeah.
our joint venture has import duties excluded, and we also have a waiver for taxation for 8 years, which is big
Okay.
help. The tax rate is, by the way, is only 15%, but no import duty on anything that we bring in for capital and operating costs for the projects.
Right. Got it.
Normal royalties, I should just say, 3% royalty on bullion sales or gold sales.
Right. So that's not dissimilar to any other country.
Pretty similar.
Yes. Someone's asking, have you seen a lot of Canadian investors looking around?
No, Canadians were down in Cuba in their droves in the 1970s and 1980s.
Yes.
They stopped playing down there when BRICS dried up the market for capital. And of course, where do you withdraw from most or first?
Yeah.
Cuba, or some of the more difficult regimes. So there's very little Canadian. There's a couple of people who've kicked tires down there, but the only Canadian group that's very active and expanding is Sherritt in the nickel sector.
Okay.
Trafigura, as I said, have developed a 300 million base metals mine, Castellanos. They're expanding that with some copper properties that they've taken from the government. And it's something that I might just emphasise. In the longer term for us, we have 4 fantastic concessions, potential porphyry copper deposits. We don't have the money to explore them, but ultimately the joint venture, when it's generating cash flow, can start paying attention to that. And I've just renegotiated the joint venture agreement so that the joint venture, the company that we're involved in, can in fact go into a partnership with a third party to start exploring some of these copper properties. And that's something we'll probably look at next year. We're a bit busy at the moment, but I'll start searching the world for someone who would like the look of our copper prospects and lay off one of them to a farming arrangement, not into the joint venture itself, but into the project. And that's one of the benefits of the recent revision. Similarly with Dimahagio, if we want to go into a partnership with the Chinese group, they don't have to come into our joint venture, don't have to come into our mining company in Cuba. it can be a relationship with a third party for a specific project.
Okay, I see. Now, when someone's asking me, this is for your first project, the initial funding for the first mine, how much debt and how much equity would be involved?
The all-up cost, including the $1.5 million acquisition of the tenement, and I might add that included the porphyry deposit as well, so it's a pretty good buy. $1.5 million to acquire the concession. Including that, the all-up costs look like being around 32 to 33 million.
Okay.
We're talking to the potential financier at 25 million of debt. We can repay that. We can repay that from that gold cap within 9 months if we wish. We'll probably repay it within 18 months and start to see a little bit of dividend coming back to us to pay for overheads. But more to the point, you've then got a fully paid for project and carry on with copper. And even if copper's only 1%, it's still a viable proposition and no debt, and you can keep chugging down the road and producing cash flow for probably another 7 or 8 years.
Easy. And then another question, Brian, is there arbitration money still due Antilles, and how are the non-core equipment sales progressing?
I'll answer the easy one first, and that's the sale of assets. It's proving fairly difficult. We've sold an oxygen plant for 750,000 Australian, but we're finding it fairly difficult to sell ball mills and ISA mills and limestone mills and so forth within country. And then we get to the difficulty of anyone from overseas bothering to come down to Cuba. And they've been sort of put off potential buyers by the attitude of the Dominican government, to be frank, because they garnished these assets for so long.
Right.
People that were interested in the oxygen plant 3 years ago at 2 million disappeared. And we're finding much the same thing with the dredges and so on. So it's proving difficult. I'm not expecting a lot of money in the short term. As to resolution of the arbitration, what the government owes us is defined. What we're haggling about on the side, there is the potential for us having to pay them for increased share of cash flow as a consequence of the arbitration ruling, and this is going to get too technically, ruling that even though this share of cash flow was not a tax, the tax code applied in calculating what the theoretical profit would be. And try this, the tax code allowed the tax department to put a notional value on our gold sales because the gold sales went always to the same party, which was a group in Switzerland. And because under the tax code, they're deemed to be an associated party under the tax code, it lets the dear old tax department nominate what the price should be, higher than we actually got. So we're haggling about paying a proportion of a cash flow that we never received. And we're having a real problem. So when that will be resolved, I don't know. We've offered them some numbers. They're disputing them. It's going to go on forever. But all I can say is I have a secret weapon. I'm going to launch at these guys pretty soon. I think I'll bring it to an end.
Okay.
Without going into it here. It's not public.
Okay. Well, on an easier front, then someone else is asking, just between now and calendar year end, what are the upcoming news? What's the upcoming news flow?
Well, within the next two weeks, we should be able to release the revised mine plan and MRE. We have the MRE now, but it sort of doesn't mean much releasing it in its own right without the mine plan schedules. We'll upgrade the financial model, so that'll be probably a month away. All those numbers are pretty fixed. We're just waiting for the mining schedules. Gotcha. The real key, as I've said already, is the financing and the offtake agreement. That's really the most important thing that will happen in the next 3 months.
Got it. Okay.
Unfortunately, we have to wait till early next year to get the capital and operating costs for the La Demahagua processing plant. It takes 3 months for the engineer to do some preliminary design before he will give us a turnkey offer.
Right. Okay. So we should expect that so kind of in the early part of 2025.
Correct.
Then, calendar
Absolutely.
25, everybody.
Yep.
Okay, great. Hey, Brian, thank you so much again. Everybody, thank you for all your questions. If you have any follow-up, Brian is always very happy to talk. Brian, again, thank you, and thank you all for attending.
And thank you all.
Bye-bye.
All the best. Bye.